And what I wanted to do is just add some context for people around time frame. So in 2020, let's just assume, I want to give people some context around the risk of holding cash to start with, and then I want to talk about where Bitcoin was and where it is now. Um, if you were to believe that inflation is only 5%, which I don't believe any Australian believes that the real inflation is only 5%, but let's say it has been only 5% since COVID, we're halfway through a decade. So if we extend that out to 10 years, I went on to ChatGPT last night. If you had saved your money in just fiat cash from the January 1st, 2020, in 10 years' time, and we're halfway through it, this is not a maybe, this is statistically just hard encoded math that cash relies on, our monetary system relies on, is engineered to be inflationary, more money going into the system. At 5%, the cash that you're holding today is worth 40% less at the end of that journey, which is just wild. Basically, it means you've got to work almost twice as hard to get the same amount of money. So that the cash asset is down 40%, right? If you look at Bitcoin, and we're only halfway through that journey, that's cash over a decade. If you look at Bitcoin back then, do you recall off the top of your head, Bish, like what Bitcoin was trading at that time, January 1st, 2020, just ballpark?
I think it was trading around 9,500, just shy of 10K at that time.
Yeah, 7,200, right?
Yeah.
So it was trading at 7,200 just 5 years ago. And today we're sitting here going, oh my God, people are freaking out at 87,000, right? It's literally a 10x in the same time that our cash is mathematically programmed to halve in value in just one decade, right? So if you hold that shit coin called the Australian dollar, it is not a maybe, it is programmed into the system. The Reserve Bank target is 3% theft a year. Oh, sorry, I mean inflation a year. It's programmatic monetary policy, right? So first of all, if you've bought Bitcoin and you're down temporarily right now, don't stress. Just know that it's not programmatically, it's actually programmatically designed to be less of it. So anyway, even in these bear times where everybody's nervous, we're still up 10x in just those 5 years. So the old saying, if in doubt, zoom out. And I wanted to just give one other analogy, which is around real estate for the people right now, because people get these shiny object theories in their head, or suffer from it. They chase literally at the moment the shiny object of gold. And I'm super happy for gold investors. And Bitcoiners and gold investors actually have a lot more in common than what a lot of people would dare to admit, because we both believe in hard money, real asset, real value, proof of work, right? A piece of gold is proof that somebody has gone and dug a hole in the ground and exerted real world energy to extract it, in the same way that mining a Bitcoin does. But I wanted to just share a quick property analogy for those of you who feel you're missing the bus because you've got a 200 grand in Bitcoin and you could have it in real estate. So as you know, Bish and Neepa and I was a big industrial investor, and I sold everything and moved to Europe and overseas. And I sold one of my properties at the very peak post-COVID, when commercial properties were trading at a yield of 3.3%, meaning that if you have $100,000 of income on a commercial building, because interest rates were so low and people weren't getting returns on term deposits in banks, everybody pulled all their money out of banks and put it wherever they could get a better return than like the 1% term deposit that you'd get.
Yeah.
They all rushed into real estate. And what that meant is that they would pay more and more and more for real estate income, as long as it was more on a percentage basis. And so for every $100,000 of income that you have on a commercial building at a 3.3% yield, which is, like, put that in perspective, about a year before, buildings were trading for 7%, and commercial buildings are largely just sold on a return basis, right? It's not how good looking the shed is, it's how much money it produces. So
Yeah.
if you have $100,000 of income off a commercial property and people are prepared to pay you, you put 0.03, I'm just trying to think what it is, 100,000
3,300.
Yeah, times 0.033. No, that's not right. I'm just trying to do the math. 'Cause I've been out of the market for so long now. Uh, Divided by, uh, I should have done this off camera. Yeah. So basically, I think it's if you've got they pay you $3 million for the property because $100,000 is 3% return on a $3 million property. Is that correct?
Yeah, that's right. So,
That's right.
yeah.
Yeah. So they'll pay you $3 million. So at the absolute peak of prices of commercial property in Australia, for $100,000 of rental income, you'll get $3 million for the building. What happened was after that, interest rates just got put up, put up, put up, put up, put up, right? And of course, when the interest rates went back up, all that money flooded back into term deposits and other assets, and people were prepared to pay less for commercial buildings. And right now, commercial buildings on the Gold Coast trade for about 6%. So if you had that same $100,000 of income divided by 0.06, you'd get 1.6 million for that property.
Mm.
So at the peak, I was able to sell some of my buildings at $3 million for every 100,000 of income. And today, that just by waiting, same building, same tenant, same income, will trade at about 1.6. So they've literally halved in value in the last 3 years. Isn't that wild
So
to think about?
that's that's insanity.
And I know, and this again, why people say, "Oh, Bitcoin is down from all-time high at 120." I'm like, dude, I literally experienced this because I sold one of my buildings on a yield of 3.3%, and then the best building in my portfolio I kept. And had I sold, I kept it for another year and a half, thinking, "Oh, I don't know, I should just hang on to one of my properties." I kept the best building. Had I sold it at 3.3% yield on the same day that I sold my other buildings, which were all cleared on the same day at the same auction, and I had buyers waiting in the room going, "We missed out on Adam's other buildings. There's going to be a war over this last one." I pulled it off the market with a room full of bidders. I pulled it off the market thinking I'll just hang on to it for security. I could have sold it that day for nearly $9 million based on the yields that had just been paid for two of my other buildings. I waited a year and I sold it for 5. So
Mm.
I just want people to dispel this myth that Australian real estate doesn't go down in price. Yeah, it does. I
Yeah.
can tell you from firsthand experience. You just don't see it in the CoinStats app every day. So just guys, zoom out, have some patience. There are big macro factors which Bish is explaining to us here of how the world works, but we don't. For most people listening to this podcast, you are not traders, as in you don't watch videos and charts all day and buy here and then sell there and then come back in. You've got to understand the fundamentals of Bitcoin or gold or whatever it is that you own, and then just understand these things, listen to these podcasts, but understand the underlying thesis of why you own the thing. All this stuff in the middle is noise, and what we look for as long-term Bitcoin is what we call signal, which is why we call the show the SAT signal. Signal is what's happening overall. And what Bish is saying, if you look at the signal, what he's explained is the noise, the machinations of what's going on. But the signal is the world is in enormous unrest at the moment. And when things like sovereign debt crises occur, that's when people go to fundamentals. And if you don't know the fundamentals of why Bitcoin is such a safe, programmatic, the right bet, then you're still not really a Bitcoiner, because the
Mm.
signal is all of this plays right into the hands of a global monetary settlement network that cannot be controlled by any one power, that is absolutely transparent, is settled every 10 minutes on chain. Like all these machinations of the Venezuelan oil capture and all these things that are going on, there's so much shadow and unaudited transactional things going on at a geopolitical level. Bitcoin doesn't have any of that. It's all crystal clear, and this is why we back that eventually the right solution will rise. So just what I want to do is I want to play this quick clip. So Luke Groman, for those of you who've never heard of Luke Groman is actually a Bitcoiner, but he believes in the technology absolutely, and he's also a professional investor. He advises institutional investors, but he's what I call a swing trader, which means he tries to buy Bitcoin when he believes that the swing and the sentiment is extremely low, and then he tries to sell it near the top and capture most of the fat in the middle. But he fundamentally believes in Bitcoin and he loves Bitcoin as an asset. So he's being interviewed by Natalie Brunell, who has a podcast called Coin Stories. Natalie's one of the few female voices at scale and is a really lovely person, very smart. But he says something in here that he believes that Bitcoin could go down to $60,000 or even lower. And I'd love to get your take on